Good afternoon. My name is Hal Pepper, and I'm an extension specialist with the University of Tennessee Center for Profitable Agriculture. Thank you for joining us today for the third webinar in the Developing Value-Added Agriculture Businesses webinar and workshop series. The topics today are business management training available through Tennessee Small Business Development Centers and loans for value-added producers through the Farm Service Agency, Farm Credit, and the new USDA Food Supply Chain Guaranteed Loan Program. We are recording these webinars and we'll make them available for viewing later. Please be sure and type your name and business name into the chat box so we will have a record of your attendance. This is especially important for those who wish to have their attendance count for meeting a Tennessee Agricultural Enhancement Program special requirement in the value-added producer diversification sector. We also request that you keep your camera turned off and your microphone muted so we can have the best quality recording possible. The objective of these webinars is to help value-added producers learn about resources available to them as they gear up to submit a competitive application to the USDA Rural Development Value-Added Producer Grant. We're expecting USDA to announce the next round of funding for the VAPG very soon, possibly this month. And today's webinar will identify training opportunities through the Tennessee Small Business Development Centers and loan opportunities available through Farm Service Agency, Farm Credit, and the new USDA Food Supply Chain Guaranteed Loan Program. Today's presenters are Charles Alexander with Tennessee Small Business Development Centers, Walter Spears with Farm Service Agency, Scott Lewis with Farm Credit, and Charles Morris with USDA Rural Development. So Charles, we'll begin with your presentation about Tennessee Small Business Development Centers first. You can share your screen whenever you're ready.
Good deal. Well, let's see here, sir. I hit share screen and I need a little help from you.
Okay. Let's see. Have you got your PowerPoint up and running?
On my end, sure.
Yeah, okay. I cannot see it. It doesn't look like it's been shared yet.
Well, when I hit share, it says host participant is disabled.
Ah, okay. You need some help from me then to let you share it.
Just a
Sorry
smidge.
about that. Yeah. Make you a co-host. So I apologize. Now you should be able to go.
Now tell me if you see my lovely screen.
Yes, sir. We can see it. Yep, looks perfect. Thank you so much.
Well, good deal, folks. I appreciate you guys attending here today. I know everybody's probably in the comfort of their home, some way, shape, form, or fashion. Ball State Community College, where I am located, is shut down for the day. So I am in the bonus room. If you happen to hear 3 screaming children in the background, they're not at school either, but they think it's a snow day, which basically means it's a religious holiday around here. So I'll apologize in advance. So the first thing I want to ask, and I know we probably don't have an easy way to communicate back and forth. First and foremost, if you've ever heard of the TSBDC, which a lot of folks have not. It's probably not the best name you could possibly come up with, but that is what we have. Is the Tennessee Small Business Development Center. And what we do is pretty simple yet very effective. If I can get there we go. What we do is 2 simple things. First and foremost, we offer low cost, or as in a lot of cases, free training for small business owners and soon to be small business owners in the Tennessee area. And we also offer, even better, free one-on-one business coaching for folks that own a business or want to start a business or just grow a business. Now, there's a reason that all of these things exist. According to a lot of different studies out there, about 2 out of every 3 businesses do not succeed within the first 5 to 10 years, which is a scary concept. As I just told you, I've got 3 kids, all with an entrepreneurial spirit, ages 9, 10, and 13. With that stat, that means 2 out of 3 of those little monsters end up living in my bonus room forever, and we've got to prevent that. That's why we exist. Now, normally when I say free, what does that possibly make you think of? In most folks' cases, they could say something polite about how you've helped the world and you've offered a free service, but most of the people just happen to say something more like along the lines of this. What's the catch? So I can assure you the catch is not a 90-cent, 90-minute timeshare sales seminar where you can learn about diversifying your real estate portfolio. And we're not signing you up for any free CDs for only a penny. The catch in this particular case is that our funding, see if I can make this little fella up here go away. You'd think after a year and a half, I'd be less Zoom challenged, but I'm working on it, folks. Hey, our funding comes partially from the Small Business Administration. Now, does anybody here, y'all type in the chat real quick, and I'm going to pull it up so we can all see it. Anybody know who funds the Small Business Administration, part of the federal government? Catherine is up on it, and I assume several of you will be following suit. That's right. You have already funded it. So half of your funding, half of the funding that comes through this thing, through the Small Business Administration is given to the TSBDCs or SBDCs nationwide, since we're not the only ones that do this. Our only catch is that we get some local funding, non-federal dollars. And in most cases, all of us are located at a college or a university. For me, I'm in Gallatin, so I'm at Ball State Community College. I have a 4-county footprint. Ball State puts a couple of bucks in, and then I also get the opportunity to go out and raise funds to tell everybody about not just what we do, but to get them to help match what the federal government gives us. That'll be people like the city government, county government, banks, chambers of commerce. So why am I boring you with this sort of stuff? Well, therein lies the catch. If you do work with a TSBDC, and I highly encourage you to do so, we're gonna survey you and email you just a little bit. Nothing too annoying, but just to first and foremost check in to see what kind of progress you're making, but then also to see if you started your business or if you hired people, if you invested money. That is the way that we continue to get funding on our end. We take a little report card that looks just like this. In this particular case, this is the one just for Vol State only. We have 15 centers all across the state, and I'll just show you here in a minute where the little push pins are so you can recognize where they all are located. But you could essentially multiply these numbers by 15, and that's essentially what we do every year. Last year, met with well over 100 clients, had a bunch of people come to workshops, but most importantly, we were helped to work one-on-one with our clients to invest about $5 million, a lot of which was bank lending, some of which was owner investment, helped 10 businesses get started and helped to create and retain a lot of jobs. As I stated, we have 15 centers all over the state, 40 plus counselors, and they all do very, very similar things. Push pins here probably didn't help you a whole lot. And if I did a poor job here, Hal will help correct me, but our website, and I will also put it in the chat here, tsbdc.or. I sent that directly to Tim. Didn't want everybody else to get it. Although Tim can give us a plug there, as he stated earlier, he's worked with the SBDC before, was even a rising star. On that website, you'll be able to see all of our different locations. We have all 95 counties covered in some way, shape, form, or fashion. And if nothing else, right now, most or all of you could go online and sign up for a wide variety of our workshops. All are through, almost all. Some are back in person, but almost all are Zoom at this point. I'll take just a couple of minutes and also kind of discuss. SBA says the success rate's only about 50%. I've read other stats that are a little higher. We're going to cover just a few of the reasons why businesses do not succeed, not necessarily just so you can get an idea of what works, but what doesn't work. In the first few is and the main one I'll cover is just a lack of planning. Planning for a lot of people only exists in their head. It's the thinking, talking, praying, and going in a loop over and over of what you want the business to look like when it's all said and done, what the logo is, what the name is, and all of those are fun things. But I would highly recommend to you that proper planning looks like you putting pen to paper in some way, shape, form, or fashion. Pick a goal for your business and a monetary goal that you can track. How much money do you want to make? And then work backwards into that goal, folks. That's the smartest way you can create a business plan. And once you do that, everything else starts falling into place a little bit. Plans do tend to get sideways, but they're better to have on the front end than to not have at all. But that helps cover up the lack of experience, capital, cash flow, and poor location. In terms of marketing your business, I can tell you if you learn nothing else from me today, make sure that you spend a significant portion of your time marketing your business. 20 to 25% of what you do on a regular basis probably needs to be promoting your services, your product. And most people just choose not to do that. They bury their head in the sand, get inundated with the day-to-day activities, with the minutia, and just kind of become amateur firefighters. And that's not what you signed up to do. It is important that you share with everybody else what you do and why you are different. I'll even tell you next week, I have a free workshop online that are the 5 steps to marketing success. You can find it at the TSBDC site. But if you can work through marketing, work through delegation, and plan a little bit, along with some of these other fine things on here, you'll get outside of that 70 to 50%, and you'll be on the top side of it. And that's why we're here. We're here to help you, not just through the startup phase, which I know most of you are probably way past at this point, but the business planning, sources of capital, marketing, management. A couple of quick clients of mine that I've worked with in the past, and again, this is just in Gallatin. There are in the Sumner County area. There's stories like this all over the state. Don't know if you guys ever heard of Cafe Rocas, a little Mediterranean restaurant in Hendersonville. Helped them get started in 2008. Walked them through the steps, getting funding, getting organized. They're still a client of mine to this day, and they have really had a lot of success, not necessarily because of anything that I've taught them to do, but just because they did the things we just discussed. They plan, they market. You can kind of see the fellow over here with the sunglasses. Well, they're all sunglasses now, aren't they? That's Guy Fieri. He put them on diners, drive-ins, and dives, and they've been wide open since. Another client of mine, also in Hendersonville, Jason DeStefano, came to us years ago, and he was a startup as well, but he's still a client of mine to this day. So he started with just a concept in his head for recycling locally. We didn't have any larger companies that did that, and that's a business that he started, he scaled, he got funding for. He finished this thing up with 5 trucks, a dozen employees, a drop-off location. Now he's in a position where, and I hope he doesn't mind me sharing it. In fact, I know he doesn't because he sent me the information. He's in a position where he's already ready to sell it and do his next thing. So that's kind of support you can get from the TSBDC. See, we've got a chat here. That's people saying who they are, not for me. And that is all I have. So I'll get out of the share and get it back to Hal.
Okay, thank you so much, Charles. Y'all are a great resource, and I know the training that y'all have with different business planning and record keeping software. You offer some really good training, so we appreciate your sharing information about that today. And there's more on their website that Charles put in the website there. If you have any questions for Charles, I want to put those in the chat. We'll continue to monitor those. Our next presenter, if he wants to go ahead and share his screen, is Walter Spears with Farm Service Agency. Walter's going to tell us about loans available through Farm Service Agency and a little bit about requirements to get those, and specifically talk about the microloans that Farm Service Agency has, that has a little more streamlined paperwork and application process. So look forward to Walter when you can to share your screen with us.
Well, good morning, everyone. Can everyone hear me okay?
Yes, we hear you really well.
Perfect, perfect. Let me share my screen. All right, are you able to see my PowerPoint?
Looks good. Thank you.
Perfect, perfect. Well, good morning, everyone. My name is Walter Spears, and I'm a farm loan specialist with the Farm Service Agency here in Tennessee. I'm actually headquartered in Nashville in our state office, but today I'm working remotely, and I'm actually similar to Mr. Alexander. I'm located in Gallatin today, and the snow's coming down, and it's a good day to be inside and not have to travel to Nashville. But appreciate everyone's or appreciate the opportunity to be here and kind of go over some FSA loan programs and more specifically the microloan program that the agency started anywhere from 8 to 10 years ago, and we've had a lot of success with it, and definitely happy to have this program available. To get started, kind of an overview of the department, the Farm Service Agency, or FSA, we fall under the umbrella of the USDA, similar to Rural Development and RCS, Ag Statistics Service, and other federal agencies. At FSA, we cover, here in Tennessee, we cover all the counties, all 95 counties in Tennessee, with 8 farm loan teams. And we do have some satellite offices in various locations throughout the state. So all 95 counties don't necessarily have a physical location, but no matter what county you're in Tennessee, there's a farm loan team that covers your county. Kind of some history. The Farm Service Agency was kind of created when the agency split back in 1995. Currently, FSA is consists of farm programs and farm loan programs. Farm programs was the formerly the ASCS, the Agriculture Stabilization Conservation Service, and then farm loans, we used to be the Farmers Home Administration, and that changed in 1995 when the agency split. So if you're familiar with some of the old acronyms, we're basically the same organization and the same agency, just operating under a different name. And then to get everything started, today I want to talk a lot about microloan programs, which is loans under $50,000 that can be used for your farming operation. However, it's difficult to only talk about microloan programs without explaining kind of all the programs that we have available, because there's a lot of overlap with some of the purposes and requirements for each of those programs. We have 2 different types of loans. We have direct loans and guarantee loans. A direct loan is where you would come into FSA, file your application, and then if you're approved, FSA would loan you loan funds. And then throughout the life of that loan, the servicing of that loan, you would deal directly with an FSA field office with making your monthly or yearly payments until that loan matures. With a guarantee loan, that's where FSA would guarantee a private lender's loan. Most of the time, it's a bank in town or a lender such as Farm Credit, and they would provide the financing for you to purchase that tractor, to purchase that farm, or that crop loan. And then throughout the life of that loan, you would actually deal with the private lender, and FSA would be more hands off. So you would make your monthly or yearly payments as scheduled to that private lender. So with a direct loan, farmers would be our customers, FSA's customers. With a guarantee loan, the lender in town would technically be FSA's customer, and then the farmer would be the lender's customer. And that's some of the differences between a direct and guarantee loan. And just some general eligibility requirements, which with each loan program that we have, there's specific eligibility requirements that are tied to each one, and they differ with some of those requirements. However, this is kind of a brief overview of the requirements that apply to all of the loan programs that we have. And like I said, there could be other eligibility requirements depending on the size, the type of operation, or the loan request, or the size of the loan. Now, the big one, in order to be eligible, you're required to be a family farmer or a family farming operation. Now, we are not authorized to loan to nonprofit organizations, agro-tourism uh, operations, or any other kind of business entity that's not agriculture related. In order to be eligible, and that includes family farms also. In order to be eligible, your operation would need to be production agriculture, which is the intent to have a profit. And that prevents us from loaning any funds to hobby farms, or nonprofit organizations, or anything like any of those various operations. Now, with the credit history, other lenders in town, a lot of lenders have different credit requirements. Uh, we somewhat mirror private lenders, somewhat. However, we don't analyze credit history the way that a lot of lenders do. We don't have a minimum credit score or any kind of criteria like that. Initially, we would look at the last 3 years of your credit history, which shows up on a credit report or any other verifications that we receive. And then we could also look at the entirety of the credit report also, but we don't have really a minimum credit score that we go off of, where it's if you're above this number, you're eligible. If you're below that number, you're not. So we really don't operate like that. We get more into the weeds of things and analyze the credit history uh, that way. And another of the general eligibility requirements, you're required to be unable to obtain credit elsewhere at reasonable rates and terms. Since we are a government agency, we're not in competition with any private lenders, and we don't want to steal any loans that they could potentially make, because that would cut into their profit, because the Farm Service Agency is making loans that another lender could possibly make. So, uh, since we are not in competition with private lenders, we are only able to loan funds if you go to a bank, get denied, and you can't get credit elsewhere. The next step would be to come into the FSA office for that funding. And then lastly, we really consider a farm uh, if your projection for the upcoming year has a gross income of over $1,000. So, and that's not net income. That's simply gross income. Anything below that is kind of gives the appearance that it's hobby farming and not with the intention of for profit. Now, the microloans that we have available, it's really based upon the dollar amount. So microloans can range anywhere from a very small loan up to $50,000. And a microloan can be used for any kind of a operating purpose that is tied to the farm, or a farm ownership loan, or an FO loan that's used to purchase real estate. And those two loans have different interest rates and different terms. For operating loans, we can go up to 7 years if it's a term item that you're looking to purchase, like a tractor, or if it's a crop loan or a feeder steer loan, those typically are anywhere from 12 months uh, and less. So that's kind of the difference between a annual operating loan and a term operating loan. And for a microloan to purchase real estate under $50,000, the maximum term that we could go is 25 years. And we can also go, uh, if you request it, we can put it on a 15-year term, a 20-year term, and kind of be creative in that aspect. But the maximum that we can go on the term is 25 years for a microloan used to purchase real estate. And both of those loans have different interest rates. Our interest rates reset every month. So at the beginning of the month, it'll have an interest rate that is pretty much set in stone until the next month. Currently, January, that is 2022, living in the past. But for January 2022, the current interest rate is 2.125%, and for operating loans, and then 3% for farm ownership loans. Now, the next question would be, what can we finance that would be beneficial to your farm? With an operating loan, uh, with an annual loan, we could finance startup expenses, annual operating expenses, which can include feed, seed, fertilizer, payroll, any kind of typical operating expense that you would have year after year. And that could also include feeder livestock, where the cattle that you're purchasing will be sold within the next production cycle. For a term operating loan, where we could finance anywhere from 5 to 7 years, that would include brood stock, bred heifers, cattle, ewes, swine, any type of livestock that will be on the ground for more than 1 year, any kind of a farm equipment that you'll use on your operation, tractors, sprayers, bush hogs, really any type of farming equipment. And then also we could possibly include high tunnels and hoop houses in a term operating loan. Now, for a farm ownership loan, that's used to purchase farm land. So we don't have a minimum or maximum acreage requirement. Really, it's dependent upon the dollar amount. If you can find real estate under $50,000, throughout most of the counties, in Tennessee, on the local level, if you want to be enrolled into the green belt, you're required to have a minimum acreage of 15 acres in order to be considered uh, agriculture and get that tax benefit. Here at FSA, we don't have that requirement. We have a few farms that operate on less than an acre. We have a few farms that operate anywhere from 5 to 10 acres. And we actually have a few farms that operate in a commercial building, in a rented commercial space. That particular operation is a specialty operation that's high labor intense, growing specialty crops indoors to sell at the farmers market, grocery stores, anything like that. And when you drive by it, going down the road, you wouldn't even realize it's a farm because it's in a commercial building. However, since we don't have a minimum acreage requirement, uh, we do have some farmers that operate non-traditionally from your typical farm. Now, there's a few benefits to the microloan program. When you want to apply for a loan over $50,000, we have a typical application packet that you're required to submit. Have to get a few years worth of tax returns, a lot of various financial statements, things like that. A microloan, it's a streamlined process, and it really is tailored towards smaller operations that don't need such a large amount of capital. We do have some small operations that need more capital than the $50,000, and they can still apply for farm financing. It's just that small operation, a microloan wouldn't benefit their operation, so they would get a regular loan. And then with all the loans that we have, we can do 100% financing. However, with a microloan, if you're looking to purchase a tractor or bred heifers or some brood cows, uh, if it's under $50,000, we have the ability to only take what you're purchasing for collateral. So it's 100% financing. Our loan to value is 100%. No additional collateral is required. And that benefits a lot of operations because we don't have to tie up a lot of assets that operation could use in the future to get financing from a lender in town. So that's definitely a benefit to the microloan program with the collateral requirements. And below, these are just a few of the different types of operations that we have here in Tennessee that we're providing financing to. Really, if you can grow it in Tennessee and it's an ag commodity, there's a good chance that we could be involved with providing that farm financing. Uh, the big ones in Tennessee, livestock, row crop, cotton, and tobacco. But we also finance some of your specialty operations that their main market is a farmer's market or a restaurant, grocery stores such as leafy green crops, tomatoes, mushroom operations, orchards, things like that. So the lower dollar amount with the microloan program, with the uh, with the streamlined process, definitely benefits smaller operations where the market is different than taking your livestock to the stockyard or your grain to the grain elevator in town, where the marketing plan really comes into play. Now, with the regular loans that we have, there's some increased requirements and information that you would have to submit, and possibly some eligibility requirements if the loan request is over $400,000, or if the loan request is over $50,000, which would not be considered a microloan. But we do have these larger loans available for operations that need more capital than what the microloan can provide. For operating loans, we have a $400,000 limit for term items like sprayer, combine, uh, grain bin, things like that. We can go up to 7 years on those, which is similar to the microloan requirement. The interest rate is the same. No, not it doesn't matter on the dollar amount for operating. It's for this month, it would still be 2 1/8. And for farm ownership loans, the maximum limit that we have is $600,000. And for a microloan to buy real estate, the maximum term was 25 years. For a regular loan over 50,000, the maximum term is a 40-year loan. So if you're looking, if you're wanting to buy a piece of property that's over $50,000, you do have that benefit if needed for the cash flow. We do have the ability to go 15 extra years if it's over $50,000, and that interest rate is the same whether no matter the loan amount. And then also with a farm ownership loan, if your operation is in need of more funds than $600,000, like if you want to, if you're looking to buy, let's say, a $1 million piece of property, we have joint financing options available where we can get another lender involved and do a joint financing arrangement. And those arrangements are pretty common here in Tennessee. One example would be if you're looking to purchase a $1 million piece of property, we get another lender involved. That lender would loan $500,000, and then we would loan the remaining $500,000 to get you to that purchase price. And in a joint financing option, that interest rate, our interest rate, would not be the 3%; it would be lower at 2.5. So that's definitely a benefit of joint financing arrangements. Half of the money that you would be receiving is at a lower interest rate, and since our loan limit by itself is 600,000, you would still be able to purchase a $1 million piece of property because FSA would only be loaning half, or 500,000. Now, the guarantee loan limits that we have, they're a lot higher than our direct loan limits. And also with the guarantee loan program, we have more funds available that Congress allocates to us on a yearly basis. So that's definitely a benefit for some of your larger operations. At the end of the fiscal year, depending on what year it is, there's definitely a chance that we could possibly be depleted of direct loan funds. So I believe back in 2013, there was a lapse in funding, and we were able to approve loans, but we couldn't fund them for 4 or 5 months because we didn't have any money with the budget. Uh, Guaranteed loans were not affected, to my knowledge, during those years because there's a lot more dollars available for the guaranteed loan program. And with the limit, it's 1.825 million, and that could be a combination of $1 million for real estate and then $825,000 for operating, or any combination you can come up with as long as the total limit is below that 1.825 million. And with a guarantee loan, the terms and interest rate, they are determined by the lender in most scenarios. With a guaranteed loan to purchase real estate, we do have the ability to guarantee a 40-year real estate loan. However, that's all dependent upon the lender. A lot of lenders are not comfortable with 40 years. They only want to go 20 or 25 or 30 years. In that scenario, even though we could guarantee a 40-year loan, that deal could not happen because the lender wouldn't sign off on it because their maximum term limit on that particular loan with that particular piece of property was only 25 or 30 years. So it's all dependent upon the lender and what they can sign off on. Again, my name is Walter Spears, and I'm a farm loan specialist here in Tennessee. If you have any questions in the future, or need any kind of informational purposes to see which field office you should contact to apply for an FSA loan, definitely give me a call, and we can get you in touch with the right contact. I put Greer Gill's information on here also because she's the outreach coordinator for all of Tennessee with the Farm Service Agency. She's the coordinator for both farm programs and for farm loan. And she regularly works with UT Extension, the Tennessee Department of Ag, Pick Tennessee Products, and other ag organizations throughout the state. So I wanted to put her information out here. If you feel a need to give her a call to try to get in touch with the right organization. Do we have any questions about some of the items discussed today, or any questions in the chat?
I think you probably covered it. There was one question that I had about if their W-2 income being used or not used to document income. Could you go back over that again, please?
Yes, sir. We can, with each loan application, we would verify all sources of income and all debts associated with that particular operation. So if you're in the beginning stages of your farming operation and it's difficult to turn a profit like it is with a lot of farming operations, we can include all sources of income. So even though the farm is currently losing money, but you have a job in town with W-2 income, or if you have a side business that's your main income, like a machine shop in town, or any other type of commercial business, we can include all sources of income for cash flow purposes. So just because your cash flow shows that the farm is losing money currently, we can include all sources of income. And if that ending dollar amount in a typical year is positive, we could still make that loan. So we could use all sources of income, Social Security, any kind of pensions you have, retirement, things like that. So that's definitely a benefit, that we can use all sources of income for cash flow purposes, because with farming and definitely with startup farming operations, oftentimes it's very difficult to turn a profit in the beginning stages of the operation.
Okay, see another question there in the chat. Someone's asked, what about being able to go into agritourism on a small farm, such as setting up a campground?
That would be more tailored towards the Small Business Administration. If it's an agro-tourism, that's currently not an eligible enterprise with FSA regulations. So we would not be able to provide any financing for any agritourism uh, operations. However, there are other government agencies, such as the Small Business Administration, that could provide some funding for that. Um, and the reason for that, all of the operations that we're able to finance, they are for production agriculture purposes, for growing something or raising something in order to sell as a commodity. So currently, agro-tourism operations are not an eligible enterprise, and those would be best suited with the Small Business Administration.
Okay. What about Walter? What about someone who is raising cattle and they want to sell meat? So they've gone and gotten the proper permits to get those animals slaughtered and processed at a USDA inspected facility. They get a retail meat permit from Tennessee Department of Agriculture, and they're selling meat. Is that enterprise something that you could finance?
Possibly. And the reason I say possibly, if you're looking to set up your own butchering facility, we can possibly do that. However, the majority of the income that comes from that facility would need to be from cattle that you raise. So if you're looking to uh, buy a bunch of cattle and then only hold them for a day or two and then process them and sell them that way, that would not be you producing your own cattle. That would be that's more of a commercial business, even though it's agriculture in nature. You would not be raising those cows because you would just be buying them at the stockyard and then you would be processing them that way. So in that scenario, we could not finance any type of processing facility. However, if you have your own herd and uh, year after year, the majority of your income from that facility will come from stock that you raised on your farm, then we could possibly get involved with financing that. But if you only have 10 cows and you're going to process 7 or 8 calves per year, but you're also going to in total, you're going to process 100 calves in a typical year and make most of your money from buying elsewhere. That operation would not be an eligible enterprise. So to answer your question, yes, we can finance that, but the majority of the income would need to come from stock that you raise.
Okay, very good. Okay, well, thank you so much for sharing this information with us, Walter. Really appreciate that. And our next presenter will be Scott Lewis with Farm Credit. And while Walter is unsharing his screen, and Scott will then be able to share his, while they're doing that, if you have not already, well, I see we've got another question here in the chat. I was going to mention, please be sure and enter your name and your farm business name in the chat if you haven't already. But I did see, now I've lost my chat. I see a question here, Walter. What if you have a farm and a processing facility and you plan to purchase livestock from other farmers? I guess we're still looking at that. Most of it needs to come from your animals that you're raising. Would that be correct?
Right, right. So with that one, they have a farm and a facility. Plan to purchase livestock from other farmers.
So I think the
At
question is,
the
would you be able to finance that purchasing of livestock from other farmers that are going to be processed in your processing facility, assuming that you meet
absolutely.
that 50% rule?
Well, with this one, it sounds like they already own a farm and the processing facility. So there's no financing involved with that. However, they're going to be purchasing cattle elsewhere and processing it themselves. That's how I would interpret that question. Um, in that scenario, I would probably need to get a little more information because if you're looking to let's say it's feeder steers, you're buying 500-pound feeder steers, you're going to grow them out to 800 pounds and then process them yourself. Absolutely, we could finance that because uh, a typical feeder steer operation, that's kind of how they operate. Raise for 5 or 6 months, sell them, and then do another group. Typically have 2 to 3 groups a year. So in that scenario, we would be able to get involved with the financing of those cattle. Um, However, it would be if you were wanting to purchase those feeder steers and then the next day start processing. That one's a little bit of a gray area, and I'm going to err on the side of caution with we could not, because you would not be raising those calves or growing them out. You would simply be purchasing, have them on the ground for a day or two, and then process. In that scenario, you wouldn't be producing the calves, so we could not finance those calves. But if you're gonna raise out those steers, then definitely we could get involved with the financing of those calves.
Okay, makes sense. Thank you very much, Walter. Really appreciate you sharing this information with us.
Yes, sir. Thank you.
Okay, so our next presenter is Scott Lewis with Farm Credit. And we've got a couple of more presenters. I realize we're probably going to go a little over today. So if you have to sign off and can't stay with us all the time, we're going to record them. You'll be able to see that later on the recording. I'm going to turn this over to Scott and ask him to share with us some information about loan opportunities with Farm Credit. Scott, are you there with us? I think you're muted. Unfortunately, we can't hear what you're saying. And I haven't seen your screen yet to share that. When you get a chance, if you could share your screen, that would be great too.
Can you guys hear me?
Yes, sir, we sure can. Thank you. And we can see your screen too. So it looks like you're good to go. Thank you, Scott.
All right, just want to make sure. All right, let's see here. All right. So thank you for including Farm Credit in this discussion. We've always worked very closely with the Center for Profitable Agriculture and with Farm Services Agency and with other agencies across the state, and we feel like it's a very good opportunity to share with others throughout our state what exactly it is we do. So can you guys see my screen?
Yes, sir, we surely do.
All right, thank you so much. I'll go through rather quickly what we do at Farm Credit MidAmerica. Some of you may be familiar with us. Our financing opportunities and eligibility as a preferred lender of FSA, we do have similar eligibility, similar financing opportunities. We do finance part-time farmers, full-time farmers, and the like. But I want to go through some slides with you. I've only got a few of these, and then we'll open it up for questions if we have any time for that as well. A lot of people are unfamiliar with what we do. We went through a structural change about 10 years ago. We used to be called Farm Credit. We are one of 67 associations across the United States. So whether you go to Tennessee, Kentucky, Indiana, Ohio, California, Puerto Rico, or Hawaii, there's a Farm Credit Association that will serve you. We have over 100 years of ag lending experience. We just celebrated our centennial back in 2016. So we were brought about to provide long-term financing for agricultural producers as an act of Congress. We are what's called a government-sponsored enterprise. So we don't receive funding from the federal government, but we do receive that benefit of being a GSE. Our goal at Farm Credit MidAmerica is to secure the future of agriculture in rural America. We're a $32 billion owned and managed asset association. We're one of the largest associations throughout the country. Our association is in Tennessee, Kentucky, Ohio, and Indiana. We do offer patronage dividends. Back in 2016, our board of directors passed a resolution to begin a patronage program. And it basically, if you're unfamiliar with that, patronage is a name for the capital that cooperatives return to customers. Eligible customers receive their checks for 2021 during Patronage Week, which we'll have March 20th. Farm Credit's strong capital position combined with our geographically and industry diverse portfolio enables our organization to be committed to paying patronage. So our board of directors and our financial plans currently plan to do that going forward, and I don't foresee that to change. It's not a guaranteed payment, but it is something that we anticipate going forward. Throughout Tennessee, we have 19 offices, all the way from Somerville and Ripley, Tennessee, over on the western part of our state, up to Johnson City, up in the eastern part of our state. We do work, as I said earlier, closely with FSA in making loans, and sometimes we work with FSA in participations, and we also work to get guarantees on our loans. We do offer leases where there are tax advantages to producers. We offer crop insurance. Basically, if you're a full or part-time farmer, the opportunities for financing with Farm Credit are virtually unlimited. We also loan money for rural home mortgages. We loan money to rural utilities. A lot of people don't think about that, but we also do that. Any type of agricultural real estate loan, equipment financing, livestock financing, operating needs, Farm Credit's got you covered in that area. Flexible programs, we look for what's right. We try to have a good relationship with our customers. And as I said earlier, livestock purchases, equipment, construction, operating needs, leases. We like to give back to our community, and our lending philosophy goes back to our compass there that you see on the screen. We put the customer at the heart of all of our lending decisions. One of our programs that we're very proud of that we promote at Farm Credit is our Growing Forward program. We believe that's a good way to ensure the future of rural America. Our Growing Forward program is for young beginning farmers. We have relaxed underwriting standards. We do help with business planning for those operations, competitive interest rates. A lot of times the fees that they are required to pay are waived. We have knowledgeable staff throughout our state. As I mentioned, we had 19 offices throughout the state. And we have an educational component that our producers in this program are invited to attend, which helps them assess the operations that they run, assess and understand the financial impact that they have and the requirements that they would need to fulfill going forward to stay in this program. We also have a streamlined application process for people desiring to purchase equipment or livestock. And for just like with FSA, I think theirs goes up to $50,000. We have a $75,000 streamlined application process that customers can access online by going to www.e-farmcredit.com, and there's an application link there that you see on the screen. Typically, if customers apply online, we'll have a decision within an hour. We can close those loans. Typically, if we get those applications in by 2 o'clock, we can close those the same day and have funding to their bank by ACH. So if someone's looking to purchase equipment, livestock, and that sort of thing, we can get that done very, very quickly. So additional information regarding Farm Credit, real estate advances up to 75% loan to value. We would be doing an appraisal on that real estate. In cases where there's construction involved, we would be looking at a real estate purchase / construction loan, and it would require an as-will-be appraisal. So if you're building a facility that you're getting financing for, we would look at that. We work with FSA, as I said earlier, to obtain guarantees when those are warranted, up to 95% in some situations. We offer higher advance rates on equipment and livestock purchases beyond that 75% that I mentioned to you. We have local offices. We're in an excellent capital position. Farm Credit is a very strong association, and therefore we are, as I said earlier, able to offer our customers that patronage, which helps them and their operation. We have the expertise to guide you through the process. All of our loan officers and our staff are familiar with the ag industry. You just simply won't get that by going to a lot of banks. We understand agriculture, and we want to make sure that we help our customers and guarantee the future of rural America. So a few things that I would point out to you if you're interested in obtaining financing with Farm Credit MidAmerica. You're going to want to make sure that you understand what it is that you're borrowing money for. Your goals are very important to us, and we want to work with you to understand what those goals are. We will get an application from you. In most cases, we'll need to get a current balance sheet, and that is just tell us what your assets are worth and what your liabilities are. We'll look at that and determine the viability of your operation. We're going to ask for some earnings information. Typically, we're going to ask for 1 to 3 years of tax returns. In some cases, we don't need all that information. Again, it depends on the size of the loan. We'll also ask if you do have a business, that we get those business returns. And something that's really important for a lot of the folks on this call today is if you're submitting those tax returns, electronic submission is by far the better way to get those to us. We'll need to get the complete tax returns, not just the first 2 pages, because we'll need to look at those schedules as well. You have W-2s or pay stubs. Although they're not always required, in some situations we will ask for that information. We want to make sure that we make credit decisions that enhance your operation. And a lot of people say, well, why do you ask for all this information? It's just to ensure that we're making the best decision for you and your operation going forward. And so in some situations, we may ask for less information, but depending on the size of the loan and the term of the financing, it could be that we need some additional information just to make sure that we're understanding your operation and making sure we're putting you in a position of growth. So that's all I have. I will say to you, we do have a very good website that has a wealth of information far beyond what I've gone over rather hurriedly today on this call. I would encourage you to go out there and access that website and do some research and reach out to our offices throughout Tennessee. And if you have questions, by all means, feel free to reach out to us, because we're here to help. And as I said, we want to partner with the other industries in Tennessee and throughout the country to enhance your operation and to secure the future of rural America.
Thank you so much, Scott.
Absolutely.
We appreciate that. I don't see any questions in the chat box. We'll continue to monitor those and see if we have any.
Sure.
But thank you so much for that information. Okay, so our next presenter is Charles Morris with USDA Rural Development. And Charles is going to talk to us about the new USDA Food Supply Chain Guaranteed Loan Program. This is a really new program. And while it is not a direct loan that a producer would get from USDA, their lender would apply for this new Food Supply Chain Guaranteed Loan Program. So we're looking forward to learning about this, Charles. And whenever you're ready and can share your screen, we'll be good to go.
Okay, give me just a moment. My slideshow should pop up there in just a moment. Can you all see it?
Yes, sir. Sure can.
Okay.
Perfect. Thank you.
So You're welcome. So good afternoon, everyone. I'm Chuck Morris with USDA Rural Development. And as Hal said, this is a new program that USDA has come out with, and it's called the Food Supply Chain Guaranteed Loan Program. So I'm going to just get started here. So what does the program do and what are its goals? The Food Supply Chain Guaranteed Loan Program provides financial support to qualified lenders whose loan applicants want to start or expand in the middle of the food supply chain activities, such as aggregation, processing, manufacturing, storage, transportation, wholesale, or distribution of food. So this basically puts everyone, this is anything beyond ag production and prior to retail. So that kind of anywhere in through there, it can fit within that. So the program's goal is to increase the capacity and help create more resilient, diverse, and secure U.S. food supply chain. So who is eligible to apply? So for-profit businesses are, nonprofits, federally recognized tribes, public bodies, and food supply chain entrepreneurs. So how can guaranteed loan funds be used? So this is a little different than some of our other programs, but essentially you can be used for business conversion, enlargement, repair, modernization, or development, the purchase and development of lands and buildings and associated infrastructure for commercial or industrial purposes, building or equipping facilities for lease to the public or private enterprises engaged in commercial or industrial operations, the purchase or installation of machinery and equipment, including manufacturing and information technology systems, working capital, and debt refinance. Now, the thing I will caution, you'll notice there, debt refinance can only be done when it's in conjunction with an expansion project, and the expansion project is greater than half of the funds being used. So it's not just a means to debt refinance, but that can be included with the actual project. So some ineligible use of funds include, I'm not going to cover all these because a lot of these really don't apply to anything, but the main thing I would point out is lines of credit, and I would also point out the agricultural production. So that's the the key things that I would point out there that are ineligible. But as you can see, there's a list of others, and I think Hal shared the presentation. So some key points. So this program, they have appropriated $1.4 billion in funds, and there's a $40 million max loan amount. So I mean, this can do a pretty substantial project. There's a 90% guarantee for lenders, so long as the lender is willing to offer the customer Wall Street Journal Prime plus 200 basis points or less as a fixed rate. So, as of today, I think that would be 5.25% fixed for the life of the loan. So if the lender is unwilling to do that, the lender can still get an 80% guarantee on the loan. So either way, it's going to give the lender a really good opportunity to have, a very secure loan with a strong guarantee. And as a customer, it's going to give the customer the opportunity to negotiate a really good rate because, the lender is really safe in this deal. Also, another big plus is for the customer is there's no guarantee fee. Most federal guaranteed loan programs, not all, but I know like with the SBA, with USDA's rural development's other guaranteed loan programs, typically they're around 3%. So it's substantial not having a guarantee fee. And most of them also have annual renewal fees, which are typically a half a point of the guaranteed portion of the balance annually, and that is something else that there's no annual renewal fees. So the other neat thing about this for rural development, most of our programs require to be located in a rural area. This does not. So if you have a business in downtown Nashville, in theory, this program could benefit you. Another thing I want to point out, special emphasis: 19% of the funds are set aside for meat and poultry processing specifically. So there's a big push to increase meat and poultry processing out there. And I know there's a great need across this state. All projects require a feasibility study by an independent third party. So that's something you'll need to keep in mind if you look to work with a lender to apply for this program. So some important dates. This program was released on December 9th of 21. Applications will be accepted continuously until funds run out. One thing to point out here, though, right now you can go ahead and submit an application. However, we cannot fund anything until February 7th of 2022, which is basically just over a month out. And the set aside funds for the 19% specifically to meat and poultry, that the date that set aside expires is on June 7th of 2022. Okay, so questions. I know that's one of the big things. How do I apply? You know, so questions can be emailed. Here's a specific email set up with someone in our national office that's all he's basically doing is focusing on this program and being able to answer questions for customers and lenders. And you can also contact our program director in the state, Joel Howard, and there's his phone number and email address. And you can also contact me as well. Application materials, fact sheets, Federal Register notice, and frequently asked questions, they can all be found at the link that is supplied there. And the actual, the NOFA, the notice of funding availability, that is actually, or the Federal Register notice, it is actually, the regulations are within that. So the regulations for the program are actually in the body of that Federal Register notice. And so contact EFO for Tennessee staff. Here's a list of who to reach out to in your area. And like I said, you can reach directly to Mr. Howard, the program director, or myself. Our contact info is in the bottom right. And so lastly, any questions?
Chuck, there was one question in the chat box. Someone asked, can this be used for existing expansion that has already started?
It would not be able to, with almost any federal program, especially those of us that have to go through what's called a NEPA review, National Environmental Policy Act, we cannot fund something that has already began. We have to be able to, basically, during a NEPA review, we have to ask other federal agencies and state agencies and Indian tribes in some cases to provide comments to us. And if the project has already started, then it takes away their opportunity to comment. So unfortunately, if the project's already started, we would not be able to provide funding.
Okay, thank you for that. Appreciate your sharing this information with us. Excuse me. Let's see, there's another question in the chat box. What is project being built in? What about a project that's being built in phases, Chuck?
I mean, in theory, I mean, if there's kind of an ending to one phase and a beginning to another, then potentially, I mean, I would need more detail than that. I would need to know more specific, but I mean, potentially, yes.
Okay. All right, very good. Well, thank you all, Charles and Walter and Scott and Charles, for your presentations today. These resources are really helpful. We appreciate you taking the time to share this information with us. If you've not already put your name and business name in the chat, please do that. That's the only way that we can document your attendance. We'll be sending an evaluation after tomorrow's webinar, so please be watching your email for that in the next couple of days. And tomorrow's webinar will feature a presentation on business planning from a lender's perspective from Roy Settle with First Bank and Trust. So we look forward to your joining us tomorrow, and have a great afternoon.